There's a real realization in Europe and policymakers at the highest level that there's a competitiveness problem when we compare ourselves to the US and Asia. Europe can be a very fragmented, complicated place to navigate around. And there are some great suggestions now come out from the European Commission around single supervision. It's a bit of a controversial subject, but for a multi-market platform such as Euronext, which operates in 8 countries, operating 8 national regulated stock exchanges, a single supervisor would make our life a lot easier and make our company a bit more efficient to run. The second thing for Europe to become more efficient is to recognize the role of transparent, lit, price-forming markets. There's a big trend now to bilateralization of markets, price formation potentially shifting away from traditional transparent markets. So we've been lobbying very heavily for policymakers to recognize this. But the biggest thing for Europe to change, we have to bring European capital to European firms, both at an institutional level and at a retail level.
How is Euronext integrating its cash and derivatives markets?
Our life was transformed when we acquired the clearinghouse of Borsa Italiana a few years ago. And as you know, to operate a good derivatives exchange, you need sovereignty and control over the associated clearinghouse. And so we have had in-house our clearinghouse now for a couple of years. And we are really rolling out sort of 3 areas in the derivatives space. First, around retail, servicing retail clients more in our markets with more product classes and more asset classes around derivatives. We have very strong retail participation in each of our 8 markets. So we see this as a real competitive advantage. So servicing retail better. We now in the group have a very strong fixed income franchise with our MTS business. And so we've launched early this year retail-sized derivative contracts on our fixed income products. And that's had excellent take-up amongst the retail community. And third, on the clearing side, we're really trying to find more efficient ways to clear the repo space in Europe. There are actors there already, but we're really trying to innovate with this creation of this, what is effectively a brand new clearinghouse in Italy to provide more risk-efficient solutions for the market.
How are you driving international retail into Europe's regional markets?
We often say that retail is the gold in the market. We are in the fortunate position to have access to and direct connectivity from retail brokers in each of our 8 markets. So we very much see starting with the retail as a starting point, which then, once the liquidity gets going, will attract institutional interest and international flows from outside Europe. But we see retail at the core for now, and then expanding to a more institutional business later on in the strategy.
Is Euronext equipped for 24/7 trading?
Some of our products trade near 24/7, some of the securitized derivatives, warrants and certificates, we call them in Europe, EU. It's a really interesting debate, which is primarily driven by US and a fear in Europe of falling behind the US potentially in this 24/7. We are very pragmatic, and we think we need to look very carefully at this question. It wasn't too long ago we had the biggest lobbying pressure I could possibly remember from the sell side and the buy side in Europe to reduce trading hours in Europe. They said, no, we don't care about the overlap with the US, we don't care about the overlap with Asia. Liquidity is spread out amongst the longest trading day potentially in the world. Let's concentrate liquidity in a smaller window. Here we are, 5 years later, having the opposite discussion. And there are 2 elements behind this discussion. One is the institutional side, which prefers to concentrate liquidity potentially in a shorter time window intraday. And then the other is all the new DLT tokenized driven, retail driven push to have 24/7 trading. Operationally, it's doable, but one thing we need to proceed with caution on is if we bifurcate the market between a 24/7 retail market and a smaller trading window for the institutional where there's deeper liquidity, then we will take away that retail flow from the central order book and we will create another level of fragmentation in Europe. We have to proceed with caution in this space, we think, and not get too overexcited about the hype.